Question 1. Risk assessment and pricing in underwriting. Which of the following is not a common factor considered when assessing risk for property insurance underwriting? A. The age of the property. B. The historical loss data for the property. C. The geographical location and climate risks. D. The insured's credit score. Answer: D. The insured's credit score. Explanation: in property insurance underwriting, the main factors considered are the age of the property, historical loss data, and geographical location, as these directly affect the risk profile. The insured's credit score, while important in some other lines of insurance like personal auto or life insurance, is generally not a primary factor in property insurance underwriting. Underwriters focus on physical and environmental aspects of the property, such as its age, which can indicate wear and tear, historical loss data, which reflects past claims frequency and severity, and the geographical location, which might be at risk of floods, earthquakes, etc. Understanding the risk these factors present allows underwriters to calculate appropriate premiums. Question 2. Health insurance underwriting. When underwriting a health insurance policy, an underwriter may assess an applicant's medical history. Which of the following medical conditions would most likely result in a higher premium for the policyholder? A. The previous diagnosis of seasonal allergies. B. The history of heart disease or stroke. C. A mild case of asthma that was treated in childhood. D. A single instance of a broken leg in the past 10 years. Answer: B. A history of heart disease or stroke. Explanation: health insurance underwriting focuses on the applicant's medical history to evaluate the likelihood of future claims. A history of heart disease or stroke significantly increases the risk of future medical expenses, which justifies a higher premium. These conditions are often associated with ongoing medical care and complications, leading to more frequent or higher cost claims. On-hand conditions like seasonal allergies or a broken leg are generally considered low risk and would not typically cause a significant increase in premiums, while a mild case of asthma may have an impact. If it was treated in childhood and is not currently an issue, it is unlikely to result in a drastic premium increase. Question 3. Scenario-based question. Mr. Thompson has applied for a commercial property insurance policy for his new restaurant. He owns the building, which is located in a flood-prone area. The underwriter is reviewing his application based on his history of previous flood damage claims on similar properties. What action should the underwriter take? A. Approve the policy without any special conditions, as flood insurance is included in standard commercial property policies. B. Approve the policy with a higher premium to account for the additional flood risk. C. Deny the application due to the high flood risk. D. Approve the policy with a rider excluding coverage for flood damage. Answer: B. Approve the policy with a higher premium to account for the additional flood risk. Explanation: in this scenario, the underwriter should assess the flood risk and adjust the premium accordingly. Because Mr. Thompson's property is located in a flood-prone area and he has a history of previous flood claims, the underwriter will likely charge a higher premium to account for the additional risk associated with potential future flood damage. Underwriters generally don't deny coverage outright unless the risk is uninsurable, and instead they may offer the coverage with adjustments such as higher premiums or exclusions. Flood insurance is often not included in standard commercial property policies, so the underwriter may also require a separate flood insurance policy or endorsement. Denying the application, option C, is not typically the first course of action unless the risks are catastrophic. Question 4. Underwriting process. Which of the following is typically the last step in the underwriting process for a property insurance policy? A. Risk assessment. B. Policy issuance. C. Application review. D. Premium determination. Answer: B. Policy issuance. Explanation: the underwriting process typically follows a sequence. First, the application is reviewed, then the risks are assessed, including property inspection, loss history, etc., followed by the determination of premium rates based on the assessed risk. Finally, the underwriter issues the policy, completing the process. Policy issuance is the last step after all the necessary evaluations and decisions have been made. Question 5. Commercial lines underwriting. Which of the following factors is most critical for underwriting a commercial property insurance policy for a restaurant? A. The number of employees working at the restaurant. B. The type of cuisine served and the potential fire risk. C. The location of the restaurant relative to public transport. D. The applicant's prior history with personal auto insurance. Answer: B. The type of cuisine served and the potential fire risk. Explanation. When underwriting a commercial property insurance policy for a restaurant, the type of cuisine served is crucial due to the associated fire risks. For example, cooking methods such as deep frying, grilling, or using open flames can increase the likelihood of a fire, which underwriters need to account for in their risk evaluation. Other factors like the number of employees or the restaurant's proximity to public transport are relevant, but less impactful in this context compared to fire risk. An applicant's personal auto insurance history is unrelated to commercial property underwriting. Question 6. Legal and regulatory environment. Which of the following is true regarding Washington state's insurance regulations in the underwriting process? A. All insurance policies must include flood coverage as standard course for residential property policies. B. Washington state law mandates that underwriters offer coverage to any applicant, regardless of their risk profile. C. Underwriters in Washington state must adhere to the principles of fairness and non-discrimination, ensuring that risk assessments are based solely on objective criteria. D. Health insurance underwriters in Washington state ignore pre-existing conditions when assessing an applicant's risk. Answer. C. Underwriters in Washington state must adhere to the principles of fairness and non-discrimination, ensuring that risk assessments are based solely on objective criteria. Explanation. Washington state law requires underwriters to assess risks using objective, non-discriminatory criteria. Insurance companies cannot base decisions solely on characteristics like race, gender, or other irrelevant factors. The focus is on risk, ensuring fairness in underwriting practices. Flood coverage is not typically required as a standard clause in all residential property policies. Option A. Insurance companies are not mandated to cover all applicants regardless of risk. Option B. And pre-existing conditions are relevant for health insurance underwriting. Option D. Question 7. Property and casualty underwriting. Which of the following factors is considered when determining the liability risk for a business applying for casualty insurance? A. The size and value of the business property. B. The number of employees working on the premises. C. The location of the business and proximity to hazardous materials. D. The total amount of premiums paid by the business owner in the past year. Answer. C. The location of the business and proximity to hazardous materials. Explanation. When underwriting casualty insurance for a business, one of the key considerations is the location of the business and its proximity to hazardous materials. These factors significantly impact the liability risk as they increase the chances of accidents or environmental hazards that could result in legal claims or damages. The size of the property and the number of employees influence the risk but are less directly related to liability. Premiums paid in the past year, option D, are not a direct factor in determining liability risk. Question 8. Analytical and decision-making skills. An underwriter reviews a portfolio of property insurance policies and notices a pattern of claims due to water damage in one geographic area. What should be the underwriter's first course of action? A. Increase premiums for all properties in that geographic area. B. Review the construction standards and the age of buildings in that area. C. Deny coverage to properties located in that geographic area. D. Wait for further claims to be filed before taking any action. Answer. B. Review the construction standards and the age of buildings in that area. Explanation. When an underwriter notices the pattern of claims, e.g. water damage, in a particular geographic area, the first logical step is to assess the construction standards and the age of the buildings in that area. Older buildings or those built with outdated or substandard materials may be more prone to certain types of damage, such as water leaks. Increasing premiums for all properties, option A, may be premature without further investigation. Denying coverage, option C, is a drastic measure that typically comes after further analysis. Waiting for more claims, option D, is inefficient and could lead to further losses. Question 9. Specialized underwriting areas. In reinsurance underwriting, which of the following is typically the role of retrocession agreement? A. To allow one reinsurer to offer coverage to a second reinsurer for the same risk. B. To transfer risk from the insurer to a third-party reinsurer in the event of a catastrophic loss. C. To cover risks that the original insurer refuses to write directly. D. To guarantee that all claims are paid in full to the policyholder. Answer. A. To allow one reinsurer to offer coverage to a second reinsurer for the same risk. Explanation. A retrocession agreement in reinsurance allows one reinsurer to pass on part of its risk to another reinsurer, effectively providing additional layers of risk transfer. This is done to spread out the exposure and protect reinsurers from large losses. Option B describes a typical reinsurance agreement, but retrocession specifically involves passing the risk further between reinsurers. Option C refers to surplus lines underwriting, and option D is inaccurate, as retrocession does not guarantee full claim payment but rather redistributes risk. Question 10. Emerging trends and technologies. Which of the following is a key consideration for underwriters when assessing cyber risk in commercial insurance? A. The size of the company's digital infrastructure. B. The availability of cyber liability insurance through the government. C. The company's ability to monitor employee social media activity. D. The company's history of data breach incidents. Answer: D. The company's history of data breach incidents. Explanation: when underwriting cyber risk for a business, the company's history of data breaches is a critical factor. Past incidents provide insight into the company's vulnerabilities and how it might handle future risks, making it a major factor in determining coverage and premiums. The size of the digital infrastructure, option A, and monitoring employee social media, option C. Important: while government-sponsored cyber liability insurance, option B, is not typically available for most businesses. Question 11. Insurance fundamentals. Which of the following is the principle of insurance that requires an insured to act in good faith and provide truthful and complete information? A. Insurable interest. B. Utmost good faith. C. Subrogation. D. Indemnity. Answer: B. Utmost good faith. Explanation: the principle of utmost good faith requires both parties in an insurance contract, the insurer and the insured, to act honestly and disclose all material facts. This ensures that both parties are entering into the contract with a clear understanding of the risks involved. Insurable interest refers to the financial interest an individual must have in the insured property, while subrogation, C, and indemnity are related to recovering losses and restoring the insured to their original financial position, respectively. Question 12. Underwriting principles and practices. What is the primary purpose of an insurance application in the underwriting process? A. To determine the policy premium. B. To assess the risk associated with the applicant. C. To provide information for the policyholder's claims history. D. To set the terms of the policy's coverage limits. Answer: B. To assess the risk associated with the applicant. Explanation: the primary purpose of an insurance application is to provide the insurer with sufficient information to assess the risks associated with the applicant. This includes details about the applicant's property, health, or other insured risks, which guide the underwriting decision. The premium A is determined after assessing the risk, and the claims history, C, is part of the assessment process but not the purpose of the application. Setting terms of coverage, D, comes after underwriting. Question 13. Legal and regulatory environment. Which of the following is true regarding the Washington State Insurance Commissioner? A. The Insurance Commissioner has the authority to approve rates for all types of insurance policies. B. The Insurance Commissioner can void insurance contracts that violate state laws. C. The Insurance Commissioner is responsible for underwriting insurance policies directly. D. The Insurance Commissioner cannot impose penalties for violations of insurance laws. Answer: B. The Insurance Commissioner can void insurance contracts that violate state laws. Explanation: the Washington State Insurance Commissioner has regulatory authority over insurance companies operating within the state. This includes ensuring compliance with state insurance laws and regulations, and the Commissioner can void contracts that are in violation of those laws. The Insurance Commissioner does not directly approve rates for all types of policies, nor do they underwrite policies themselves. C. Penalties for violations, D, are within the Commissioner's purview. Question 14. Personal insurance underwriting. Which of the following is a key factor in underwriting life insurance policies? A. The applicant's credit score. B. The applicant's health and medical history. C. The applicant's home ownership status. D. The applicant's level of education. Answer: B. The applicant's health and medical history. Explanation: for life insurance underwriting, the most significant factor is the applicant's health and medical history. Underwriters assess the applicant's mortality risk by reviewing their health conditions, lifestyle, family medical history, and other medical details. The applicant's credit score, A. Home ownership, C. An education level, D. are not typically primary factors in life insurance underwriting. Question 15. Property and casualty underwriting. Which of the following is considered an exposure in property insurance underwriting? A. The property's age and condition. B. The applicant's previous claims history. C. The proximity to fire department. D. All of the above. Answer: D. All of the above. Explanation: in property insurance underwriting, all of the listed factors are considered exposures. The property's age and condition may impact the likelihood of claims, as older properties may be more prone to damage. The applicant's previous claims history. B. Helps underwriters assess the risk of future claims. Proximity to fire department. C. Affects the response time in the event of fire, reducing the risk of damage. Is all valid exposures that influence underwriting decisions. Question 16. Specialized underwriting areas. Which of the following is a common consideration in title insurance underwriting? A. The applicant's creditworthiness. B. The current property owner's claims history. C. The legal status of the property's title. D. The property's location relative to natural disasters. Answer: C. The legal status of the property's title. Explanation: title insurance underwriting focuses on the legal status of the property's title. This involves ensuring that there are no existing claims, liens, or disputes related to the property. The applicant's creditworthiness A. is not consideration for title insurance, and while the owner's claims history B. may be relevant in some cases, it is the title's legal status C. that is the concern. The property's location relative to natural disasters D. is more relevant to property insurance. Question 17. Analytical and decision-making skills. Which of the following is an example of a decision-making model that could be applied in underwriting? A. The Pareto principle. B. Risk-based decision-making. C. Emotional decision-making. D. Short-term cost analysis. Answer: B. Risk-based decision-making. Explanation: in underwriting, risk-based decision-making is a commonly used model. It involves evaluating the risk associated with an applicant and making decisions based on the level of risk they present. The Pareto principle A is a general management concept. Emotional decision-making C is not ideal in underwriting, and short-term cost analysis D may be used but is not a primary model. Underwriting decisions. Question 18. Communication and interpersonal skills. Which of the following is most important for an underwriter when communicating with an insurance agent? A. Providing detailed policy documentation without explanation. B. Explaining underwriting decisions clearly and maintaining professionalism. C. Making promises about the approval of policies. D. Avoiding discussing policy terms and conditions in detail. Answer: B. Explaining underwriting decisions clearly and maintaining professionalism. Explanation: when communicating with insurance agents, it is essential for underwriters to explain their decisions clearly and maintain professionalism. This ensures that agents understand the rationale behind underwriting decisions and can convey this information effectively to clients. Providing detailed documentation A. is useful but not enough without explanation. Promises C. is unethical, and avoiding policy discussions D. undermines transparency and trust. Question 19. Property and casualty underwriting. Which of the following would likely result in a higher premium for a commercial property insurance policy? A. A well-maintained building with fire suppression systems. B. A building located in a high-crime area. C. A business with a low claims history. D. A property with updated electrical and plumbing systems. Answer: B. A building located in a high-crime area. Explanation: properties located in high-crime areas are considered higher risks due to the increased likelihood of theft, vandalism, or other criminal activities. This increased risk results in a higher premium. Well-maintained buildings with fire suppression systems A and updated systems D would typically result in low premiums as they reduce the risk of loss. A business with a low claims history C also receive a lower premium. Question 20. Reinsurance underwriting. Which of the following best describes the role of a ceding company in a reinsurance agreement? A. The ceding company receives the risk from another insurer. B. The ceding company retains all risks and does not pass any to a reinsurer. C. The ceding company transfers part of its risk to a reinsurer. D. The ceding company sets the premium rates for the reinsurance agreement. Answer: C. The ceding company transfers part of its risk to a reinsurer. Explanation: in reinsurance, the ceding company is the insurer that transfers part of its risk to another insurer, the reinsurer, to limit its exposure to large losses. The ceding company does not retain all risks. B. And it does not set premium rates for the reinsurance agreement. D. The reinsurer assumes part of the risk in exchange for a premium. Question 21. Specialized underwriting areas. Which of the following best describes a situation where surplus lines insurance would be appropriate? A. A standard auto insurance policy with no exceptional risk. B. A property with unusual or high-risk characteristics that cannot be insured through standard markets. C. A health insurance policy for a healthy individual. D. A life insurance policy with a predictable mortality risk. Answer: B. A property with unusual or high-risk characteristics that cannot be insured through standard markets. Explanation: surplus lines insurance is used for risks that are unusual, high risk, or otherwise cannot be insured through standard insurance markets. This may include properties with unique or high-risk features. Standard policies A, C, D would be appropriate for typical cases and do not require surplus lines insurance. Question 22. Emerging trends and technologies. How does the rise of InsurTech impact the underwriting process? A. It decreases the need for underwriters by automating all processes. B. It increases the speed and efficiency of data collection and risk analysis. C. It completely eliminates human judgment in underwriting decisions. D. It increases the complexity of underwriting by adding new regulatory requirements. Answer: B. It increases the speed and efficiency of data collection and risk analysis. Explanation: InsurTech refers to the use of technology to improve and streamline insurance processes. In underwriting, InsurTech can speed up data collection and enhance risk analysis through advanced algorithms, artificial intelligence, and automation tools. While InsurTech does not eliminate the need for human judgment, C. It does make the process more efficient. B. It does not necessarily add complexity. D. But rather aims to simplify the process. Question 23. Analytical and decision-making skills when analyzing a commercial property risk. Which of the following would most likely be considered? A high exposure: A property located in a low traffic area. B. A building with advanced security systems. C. A warehouse storing hazardous materials. D. A building with a low valuation. Answer: C. A warehouse storing hazardous materials. Explanation: a warehouse storing hazardous materials poses a high exposure risk due to the potential for fire, explosion, or environmental contamination. This significantly increases the risk for the insurer. Low traffic areas A and buildings with advanced security B typically present lower exposures, and a low valuation D does not necessarily indicate higher risk. Question 24. Property and casualty underwriting. Which of the following would most likely reduce the premium for a homeowner's insurance policy? A. History of multiple property claims. B. Living in high crime area. C. Installing security system and fire alarms. D. Owning pool with no safety features. Answer: C. Installing a security system and fire alarms. Explanation: installing a security system and fire alarms reduces the risk of loss or damage, which in turn can reduce the premium for homeowners insurance. A history of multiple claims A and living in a high crime area B would likely increase premiums, while owning a pool with no safety features D could also increase premiums due to the potential liability. Question 25. Personal insurance underwriting. Which of the following best describes the concept of morbidity in health insurance underwriting? A. The number of claims paid out on health insurance policy. B. The risk of loss due to the death of the insured. C. The incidence of illness or injury within specific population. D. The amount of coverage provided by health insurance policy. Answer: C. The incidence of illness or injury within a specific population. Explanation: morbidity refers to the frequency or incidence of illness, injury, or disease within a specific population. In health insurance underwriting, morbidity is assessed to evaluate the risk associated with providing coverage to an individual or group. The risk of death, B, is referred to as mortality, not morbidity. Claims paid out are a result of mortality, but are not a definition of it. The amount of coverage, D, is determined by the policy, not morbidity. Question 26. Underwriting and risk management. Which of the following is a common strategy used by insurers to manage underwriting risk? A. Risk retention. B. Risk aversion. C. Risk assumption. D. Risk avoidance. Answer: A. Risk retention. Explanation: Risk retention is a strategy where insurers retain some portion of the risk themselves, either by not transferring it to a reinsurance company or by having higher deductibles. This helps manage underwriting risk by balancing between retained and transferred risk. Risk aversion, B, and risk avoidance, D, would generally result in excessive caution or attempts to completely eliminate risk, which is not practical. Underwriting risk assumption, C, refers to assuming risks without mitigation, which is not typically a strategy for managing underwriting risk. Question 27. Underwriting decision process. When underwriting a commercial property insurance policy, which of the following would most likely be considered a mitigating factor? A, the property's proximity to a fire station. B, the building's outdated electrical wiring. C, the property's location in a floodplain. D, the property's history of multiple claims. Answer A, the property's proximity to a fire station. Explanation. Proximity to a fire station is a mitigating factor because it reduces the risk of significant damage in the event of a fire. The presence of a nearby fire station ensures faster emergency response. Outdated electrical wiring. B, and a location in a floodplain. C, would increase risk, and a history of multiple claims. D, would typically be seen as a negative factor. Question 20. Legal and regulatory environment. Which of the following types of insurance policies is subject to both state and federal regulation? A, workers' compensation insurance. B, health insurance policies. C, commercial property insurance. D, life insurance policies. Answer B, health insurance policies. Explanation. Health insurance policies are subject to both state and federal regulation. The federal government regulates health insurance through laws like the Affordable Care Act, while state insurance departments also regulate health insurance policies to ensure compliance with state-specific laws. Workers' compensation, A, commercial property insurance, C, and life insurance, D, are primarily regulated at the state level, although federal laws may apply in certain areas. Question 29. Underwriting principles and practices. What is the primary purpose of underwriting in the context of life insurance? A, to calculate the appropriate premium rates. B, to evaluate the risk and determine insurability. C, to set the coverage limits for a policy. D, to manage claims after policy issuance. Answer B, to evaluate the risk and determine insurability. Explanation. The primary purpose of underwriting in life insurance is to evaluate the risk of insuring an applicant and to determine whether the applicant is insurable. Underwriters assess factors like the applicant's health, age, lifestyle, and family medical history to make this determination. Calculating premiums, A, and setting coverage limits, C, are tasks that occur after underwriting, while managing claims, D, happens after the policy is in force. Question 30. Analytical and decision-making skills when an underwriter encounters a potential moral hazard. Which of the following actions should be taken? A, the application should be approved without further inquiry. B, the risk should be transferred to a reinsurer. C, the underwriter should investigate further and possibly decline the application. D, the underwriter should offer the policy with a higher premium. Answer C, the underwriter should investigate further and possibly decline the application. Explanation. A moral hazard occurs when an applicant may have an incentive to take on higher risks because they are insured. If an underwriter detects a moral hazard, they should investigate the issue further and may decide to decline the application to avoid covering a higher than expected risk. Proving without further inquiry, A, is not advisable, and transferring the risk, B, not a standard solution for addressing moral hazards. Offering a higher premium, D, may be an option, but it does not resolve the underlying issue of the moral hazard.